All right, guys, so now that you know what the initial breakout strategy is, or IBO, I'm going to be referencing it as an IBO a lot of the time, so just know the term. So the IBO strategy, you guys know what it is. We talked about it in the previous lesson, and we looked at exactly what the criteria is for the strategy. Okay, so in simple terms, rejection on a higher time frame, break and retest of the 50 EMA on a lower time frame. Okay, that's just the simple explanation, but in the lesson you actually guys learn much more about it. Well, in this lesson we'll be focusing more on the execution of this strategy. Okay, so the different entries, the stop losses, and the target placements. That's what we're focusing on right now. Okay, so we're going to be looking at what is the most ideal entry. Okay, what about the stop loss? What's the most ideal stop loss? There's a few different stop loss placements that one can do, and I have back tested every single one of them, so I know which one is a little bit more aggressive and which one is safer, you know, because at the end of the day, these strategies, like I said, they can be applied to swing trading and day trading, but they can also be applied to a trading style. So what do I mean by a trading style? Well, some of us might like to be a little bit more aggressive. Okay, some of us might want to be perfect, okay, and might want to execute the strategy as perfectly as possible. Other people might want to be a little bit more loose and not focus on the perfect trades, but also focus on like the okay trades, you know. So you're gonna notice that all these strategies, when it comes to discretion, what I'm showing you is perfection. Okay, what this strategy is supposed to look like at its best. Okay. But there's going to be times when, you know, it's like an okay trade or a good trade or like, you know, a mediocre trade or a great trade or a perfect trade. Okay, I personally like to focus on great, perfect. Okay, I want my trades, the trades that I'm taking, to be literally like pretty much perfection. Okay, when it comes to the strategy. Other people focus on the perfect, but they also focus on the okays. And because they're focusing on the okays, then their strike rate goes down because they're taking more trades, and more trades are not as good, if you know what I mean. So with that said, even if you're focusing on perfection, okay, which I hope that's what you'll be doing, focusing on perfection, because that is how you keep the highest strike rate. Okay, so focusing on pretty much exactly what I'm talking about in these lessons. Okay, when it comes to stop loss placement, there's still a way to do it safely or aggressively. Okay, and I'll definitely be breaking that down right now in this lesson, both options, because you may choose to be a little bit more aggressive when it comes to stop placement, and therefore there's a benefit to it. If you're more aggressive, your risk reward will be higher. If you're more safer, if you're more conservative, your risk reward will be a little bit lower. So there's a benefit to both, okay, and drawbacks to both as well. Target placement, same thing. You know, there's different ways of placing a target, different ways of management, different ways of entries as well. There's a more aggressive entry and there's a safer entry as well. You know, so we'll definitely be breaking all of that down right now. So that's enough talking from me here on camera. Let's jump on the charts and let me actually show you all of that. Alright guys, so now that we know what an initial breakout is, we're going to have a look at the same trades that we looked at the previous lesson, okay, when we explained what the initial breakout is, and focus on the entries, the stop loss, and the targets, okay, for this specific strategy, because I didn't really cover that. I just showed you the entry. So let's cover that. Let me tell you exactly what the most ideal stop loss is, what the most ideal target is, and why, okay? So let's have a look at that first example that we saw in the previous lesson, the euro-dollar trade. Okay, this is the first initial breakout. So to recap, we have the daily rejection in this case, you know, so that's the first criteria. Do we have a rejection on a higher time frame? Do we believe a pullback or a run is beginning? In this case, yes, we do have very strong resistance, as we saw on the weekly time frame, right? When you zoom out on a weekly, right away in that region we have horizontal resistance. Okay, so we do have really good resistance, and it goes even farther than that. So we do have really good resistance. The weekly chart at that point was even giving us this little doji at the time of the entry. Okay, then it exploded later after the entry, but at the time of the entry it was giving us this little doji, and the daily time frame was decelerating. It gave us an inside bar, so not a crazy reversal candlestick, but it's decelerating. Okay, So it's a pullback play, but the criteria is met. We have resistance and we are the daily chart does give us a rejection, okay? But it's a pullback play, so it's only a short-term position, period, okay? So then when you look at the intraday charts, the 1 hour chart, the next criteria, does the 1 hour chart have a break and retest of the 50 EMA? It does. We do have a break and a retest of the 50 EMA, okay? In addition to that, we also have 0.32 Fibonacci there. We also have a trend line there, you know, so you got to get used to kind of drawing as much confluence as you can. So you got a trend line and you got 0.32 Fibonacci. Perfect. What about the 4 hour time frame? The 4 hour time frame will always be above the 4 hour 50. You'll always be trading into the 4 hour 50 with this IBO strategy. So that's always a risk. And it's important for this lesson to know that, okay? With an IBO, the risk is the 4 hour 50 EMA always. That's always the first risk factor, okay? But we also have some bearish confluence here. We have a double top on a 4 hour time frame. Perfect. So multi-time frame analysis is confirming perfectly, you know, and the strategy is daily rejection, 1 hour break and retest of the 50 EMA. That's the strategy, okay? So now how do we enter it? There's many different ways on entering these kind of trades. If the higher time frames were a little bit better, you can place an order, okay? And an order would look like this. So as an example, let me just quickly jump back in time here a little bit to this moment, you know, because you'll be making your watches at the beginning of the day when the day closes, you know, so you'll be making your watches and you would notice that something like this would come up, okay? So pretty much you're making your watches at the end of the day. So in FX, the day closes at 22 GMT, at 10 p.m. GMT, okay? So if you're Eastern time zone, New York, Toronto, Florida, then it's pretty much 5 p.m. The new daily chart opens at 5 p.m. The new daily candlestick opens at 5 p.m. So that's when you're making your watch list, okay? So at that point, you will probably see something like this, okay? This is when the new daily chart opened up, 22 GMT, right? Right there. So this is what you would probably see. And at this point, you already have this breakdown, okay? So you have the breakdown, and now you have to wait for this retest. You got to make sure that we're going to have a rejection of the 50 EMA, okay? So this kind of takes more planning. In the previous lesson, we saw what the strategy looks like, but this is going to be the real execution, okay? So the way you're going to initially see it is you're going to see it as this breakdown, okay? Then you still have to wait for the pullback. Okay, and when you're waiting for the pullback, there's a few things that you can do. You can decide to place an entry, an order, you know, which will look something like this. Let me remove that for a second. It would look something like that. You would just blindly place an order, okay? Same position, targeting the 4 hour 50, you know, 30 pips or so with a stop loss of 30 pips as well, right there, okay? So you can place an entry order. You can push it even a tiny bit farther down because the 4 hour 50 is still a little bit low. You can do like 35 pips or so and get just a little bit more. So placing an order is a little bit more risk. Why? Because it's a blind entry. So you'll be placing the order again at the beginning of the day, and at the beginning of the day we're right here. You know, so you're kind of assuming that an entry will be present. Let me actually fast forward a little bit. Do it when the new pivot forms, you know, so whenever the new pivot forms for you, that's when you should be making your watch list. Okay, for me, the new pivot forms at midnight. Okay, if you're using TradingView, the new pivot should form at the end of the day at 22 GMT. You know, for me, it forms at midnight. So do your watch list at the beginning of the day when the new pivot forms. Okay, so the new pivot, if you're placing an entry order and you love what you're seeing, okay, then you would just place an order and go to sleep or go to work or whatever. That's the benefit of placing orders, you know, is that you know that the strategy is playing out, you know that the daily chart does give you a rejection, you're already seeing this 1 hour breakdown, you know, so now you just gotta wait for this retest. Now you do have pretty good resistance, you get the 1 hour 50, you got 0.382, you get an ascending trend line, you know, so you might be comfortable with placing an order. But obviously with placing an order, there's more risk. What's the risk? Well, you don't have no idea whether this will be rejected. Okay, that's the thing. You have no idea whether this will be rejected. It can just continue going up and close you out and never reject this level, never form a lower high rejecting the 1 hour 50. And that's a risk, right? So that's a risk of placing entry orders, okay? The benefit of placing entry orders is that you're always gonna get a good price, okay? And they're low maintenance. So you can make your watch list, place an entry order, and go to work or go to sleep, okay? And check the position later. I do place entry orders a lot of the times, but I place entry orders on setups that I believe are just perfection, okay? So on this position, I waited for a live trade, okay? Because the daily chart didn't have like an epic reversal, and you guys saw that. The daily chart decelerated, but it didn't have an epic reversal. So I personally place entry orders only if it's like a perfection trade. If I believe the trade is perfect, has a beautiful reversal and everything is just lining up perfectly. If I believe it's not a perfect trade, then I will wait for a rejection, okay? So I never place an entry order. Okay, in an entry order, you're just placing it at the resistance, you know? So when you're placing the order, you're placing it at the resistance area, you know? So just a little bit below the pivot, you know, somewhere around the 1 hour 50, somewhere around 0.3 to, you know, use your discretion, but you're placing an entry order somewhere around the main resistance cluster, right? So I never did that simply because I know there are better trades out there, you know, that have like an epic high test reversal on a daily chart as an example. So in this case, I wanted to see more confirmation. I wanted to see a rejection. So I waited for that, okay? I waited for that rejection to happen. So let's fast forward. And right now we're already starting to reject, okay? And right now we're pretty much rejected, okay? So we have the small high test right there, or the doji rejecting that level. So the live entry, so this is a live entry now. The live entry will look a little bit different because an entry order, you're just entering blind, you're placing an order at the pivot, the 1 hour 50, the 0.32 area. That's where you're placing the order, okay? But if you want to take a live entry, you're taking a live entry because you want more confluence. You want to make sure it's actually rejecting this level, okay? So that's the benefit of live entries. You're actually waiting and making sure the strategy is playing out perfectly, making sure that there's a rejection. So to fully make sure there's a rejection, you gotta wait for a 5-minute entry. And the 5-minute entry will be a break of the 5-minute 50 EMA. So let's see when that happens, you know? So you see right there, it's still above the 5-minute 50. And then finally, it's still not broken yet, okay? But it's starting to break, still not broken yet. Boom, entry, you know? So this is where you take your trade right away. It broke down. At that point, it rejected, okay? It rejected the levels. So this is what a live entry looks like. This is majority of my entries. Majority of my entries, they are live entries. Unless, like I said, the trade's beautiful, it's perfect, has an awesome reversal, it just looks perfection, then I'll place an entry order. Or if I'm traveling and I don't want to spend too much time on the charts, then I'll utilize entry orders more, okay? If you guys are working, you don't have time to check the charts throughout the day, utilize entry orders, okay? But live entries give you more confluence, know that, because you make sure that there's a rejection. Okay, so now you'll be taking your entry and you'll be kind of planning this as that's happening. So, you know, the way this would be kind of going, let me go back a little bit, is right now you'll be sitting here waiting. So if you're day trading this, you'll be sitting and waiting for this break to happen. So you can already plan the entry for you. You can already plan it out. So we know it's going to be a 30. We want to target the 4 hour 50 EMA because it's a pullback play. In the 4 hour 50, we don't want to be trading into it, okay? Because it's a pullback play. If it was with the trend, then we would take the trade and trade through it because there's more confluence. But it's a simple pullback play, so we don't want to trade through the 4 hour 50. We want to take a profit there. So we would kind of get ready, okay? So you need to get yourself ready when you're waiting for the position, for the entry to happen. Okay, so we want to enter somewhere on the break of the 5-minute 50, okay? 30 pip target, targeting the 4 hour 50, and a stop loss, okay? And you're waiting. So you're just waiting and waiting and waiting and waiting for it to happen, okay? And boom, entry, okay? So here is the entry and you're entering the trade right now. So you're already ready, your broker data is already pre-filled, your entry order is already pre-filled, and as soon as it breaks this 5-minute 50 EMA, boom, you take the trade short. Okay, you enter the position. It's already pre-filled, you already pre-calculated everything. You know how many lot sizes, how many lots to short, to sell. So as soon as it breaks, you're ready and you immediately go short. Okay, and then trade goes down. It's taking a while. Boom, target hit. Okay, and on a daily, on a 1 hour chart, it looked like this. It just pretty much went straight down. Right, and the target was hit right there. So that's how that entry works. Those are the two entry methods. We're gonna look at pivot orders, a little bit more entry orders, but live entries are some of the most common entries that I do, is wait for that live entry breakdown with day trading, so with day trading will be wait for that 1 hour rejection, then once that 1 hour rejection happens, take the 5-minute break to the downside, so the initial 5-minute break was the live entry that we're going to utilize. Okay, and you do this with almost every single strategy. Okay, so the live entry, we're going to see this a lot because we're going to see it with every single strategy. That's how I enter my trades. Okay, now stop loss is important. For the IBO, it's extremely important to have the stop loss. Almost for every single one of my strategies, it's important to have the stop loss above 0.618 Fibonacci. Okay, so I'm entering on the rejection of 0.382, so my stop loss needs to be above 0.618. Why? Because I don't want to choke the position. I need to realize that there might be a massive high test that happens. I need to realize that price action might even go a little bit higher before it falls down. Okay, so I don't want to choke the position. Too many people choke the position, they get stopped out for no reason. I do not want to get stopped out for no fucking reason. Okay, important. So don't choke your position, don't go too tight on your stop loss. Okay, my one rule is stop loss always around 0.618 Fibonacci, always around 0.618 Fibonacci. With an initial breakout like this with the IBO, I try to have my stop above 0.75. In this case, it was impossible. Okay, because I never want to have a position size that is less than 1-to-1. 1% reward is always the minimum for me. Okay, so if I wanted to have my stop at 0.75 here, then that would require 35 pip stop loss. But can I have a 35 pip target? And yes and no, it would be like right on the 4-hour 50 MA. So you could, but it would be like right on the 4-hour 50 MA. In this case, it would have worked out, but I chose to take on a tiny bit more risk. Still, my stop loss criteria was met because my minimal stop loss criteria is to keep my stop above 0.618 Fibonacci. So I'm entering off of 0.32, my stop loss will be above 0.618. Okay, one of the safest stop losses will be at 0.75 fib. Okay, that's one of the safest stop losses is at 0.75 fib. Okay, so I try to do that as much as possible with initial breakouts, is to put my stop at 0.75 fib. And the target is simple, so in this case it's a pullback play. So with the IBO, with the initial breakout, the safest target will always be the 4-hour 50 MA. That will always be the safest target with the initial breakout, is the 4-hour 50 MA. Okay, so typically it will be a 1-to-1 trade. Sometimes you might even squeeze a 2-to-1 position targeting the 4-hour 50, just depending on how things line up. Sometimes that happens. And sometimes you might want to trade through the 4-hour 50 if the higher time frames allow it. If the higher time frames have awesome price action. And we'll have a look at examples like that. But this is the first example, so hopefully that makes sense. So this was executed with a live entry. That's how a live entry looks like. Let's have a look at more examples of this. All right, guys, so let's have a look at the second example here. And again, we looked at this trade in the previous lesson when we were kind of explaining what the initial breakout is. So in this lesson, let's focus more on the target. Let's focus more on the entry and more on the stop loss side of things. Okay, but to quickly recap, let's just kind of confirm it again. What is the initial breakout? Well, in this example, the initial breakout was, first criteria was met, which we have a reversal and a rejection on a higher time frame. So we believe that a pullback is happening. We want to be entering at the beginning of this pullback So we believe that a pullback is happening, we have this rejection. But in this case, we also have higher time frame confluence, such as the great resistance on a weekly chart and a decent candlestick formation on a weekly. Plus we have monthly confluence as well, such as deceleration on a monthly chart and major resistance on a monthly time frame, okay? Plus the double tops. So because we have the higher time frame confluence, I ended up taking this farther down to the 20 EMA. It's still a pullback play. We don't have a trend change on a daily time frame. If there was a trend change, like a double top, then I would have pushed it down to the weekly 20 EMA a little bit farther. But it's a pullback on a daily chart still, so that's important to note. And again, we're going to cover this more in another lesson after the strategies, but it's important to know that it's a pullback play. So I don't want to go too crazy with my targets. You saw in the first example, I only took a quick 1-to-1 on a pullback. That's because I didn't have higher time frame confluence. Here I do. The higher time frames are better, and mainly the candlestick reversal is better. So I was confident to take it down to the 20. If I wasn't, then I would have just taken down to the 4-hour 50 EMA and taken my profit for a 1-to-1. But I have more confidence with this trade. So that's where discretion comes in. And because of that, I ended up taking it a little bit farther down to the 20 EMA. So I just like the way this looks, that bearish engulfing on a daily chart. I like that, it's pretty clean. So that's the first criteria. The second criteria is obviously we need a break and retest of the 1-hour 50 EMA. And we got that, we have that. Plus we have many other confluence factors. We have the trend line, we have the horizontal support and resistance level and such. We got 0.382 there. So when would this entry present itself? So this entry would have presented itself roughly right here. So when you're making a watch list at the beginning of the day, so beginning of the day would have been again right here, 22 GMT. This is the beginning of the day. So you're making a watch list before the pullback. Okay, so you're making a watch list before the pullback. But I already like what I'm seeing here. At that point, I can kind of draw in a potential wedge, so we have this wedge breakdown. So I like what I'm seeing. We have a wedge breakdown. We have a strong break even below a longer term trend line, so we broke below that. So it looks good. And because it looked good and because I like the higher time frames, I ended up placing an order here, okay? Because I had the confidence in this setup. If I didn't have the confidence and I needed to wait for a rejection, then I would have taken the live trade, okay? But in this case, I ended up placing an order at the beginning of the day, so I just placed an order just on the pivot, just a little bit below the pivot, just a little bit below 0.3 to Fibonacci. Let's zoom in, so an entry order was placed just a little bit below the pivot, a little bit below 0.3 to Fibonacci, around the 1-hour 50, around that trend line, so place an entry order instead. If you wanted to wait for a reversal, a live entry, well, a live entry happened too. We had a rejection here, okay? And then the 5-minute breakdown right here. So that was the live entry. Just like we saw in the previous example, the live entry, well, it would have been executed right here, So the live entry is obviously safer, but I liked what I was seeing here, and I didn't want to stay up and kind of watch the price action. I like the trade. So because I like the trade and I didn't want to stay up, I just placed the entry orders and moved on with my life. That's the beauty of these strategies, is that you can do that when you feel confident in the setup itself. So this setup, I felt confident, so I ended up placing an entry order, and that's the difference. I place entry orders on setups that I'm really confident in, that I really like, that I believe are pretty clean, that have a lot of resistance or a lot of support levels, like in this case. It's a pretty clean setup. It has a lot going for it. So I didn't feel the need to wait for a 5-minute break, okay, for that live entry. I didn't feel the need for that. So I ended up placing an entry order, okay? However, as a beginner, you might want to wait for that 5-minute break. Wait for more confirmation as a beginner, because it gives you an extra edge. It gives you, it eliminates that risk that it might just continue going up and never reject the level, So live entry is good in that case as well. But I ended up placing that entry order, and that's the reason why I placed the entry order there, okay? So let's zoom out and look at the position, and it's all. So I place an entry order. Again, I like even numbers, so I do even numbers. So 1.61, nice even number. That was my entry, okay? My stop loss, again, so this is the initial breakout. And what did I say in the previous example with initial breakouts? At minimum, my stop loss needs to be above 0.618 Fibonacci on the 1 hour chart, at minimum, right? On 0.618 or just above 0.618 at minimum. But the ideal stop loss for me for initial breakout is 0.75 Fib. So if I'm placing an entry order, that's exactly what I'm gonna do, okay? So I placed an entry order at the pivot at 0.382 Fibonacci, okay? Pretty much exactly there. And my stop loss was 55 pips. Again, I like even numbers. So 55 pips right on 0.75 Fibonacci. Perfect, okay? So that's what my stop loss is. That, to me, that's the perfect stop loss for this strategy, is 0.75 Fib. If I cannot get that because I'm targeting a 1-to-1 trade and, you know, I have to tighten my stop loss a little bit more to get that 1-to-1 reward risk ratio, then at minimum, I need my stop loss to be above 0.618 Fibonacci, okay? That's how I play that. And in this case, you know, I could have taken a 1-to-1 and targeted that 4-hour 50 EMA. You know, in this case, I could have pushed it a little bit more. It would have been a little bit more than a 1-to-1, okay? And target the 4-hour 50. And you can see the 4-hour 50 was still a great target because it paused on that 4-hour 50. Like I said, with the initial breakout, the 4-hour 50 is the risk, you know? So that's always going to be the safest target with initial breakouts. With this strategy, the 4-hour 50 EMA will always be the safest target, period, okay? And even in this case, it paused on it. So trading through it is a little bit more risk, but trading through it will also give you a higher reward risk ratio. But I've only traded through it because I had higher time frame confluence here, and I really liked that reversal candlestick. Okay, right there, that bearish engulfing. I like that, you know. So I was confident, so I ended up taking my profit on the 20 EMA. So I ended up targeting the 20 EMA, and my target exactly was 59.5 at 1.595. Okay, just again, even numbers. I like even numbers, just slightly above the 20 EMA. Okay, so that ended up being an entry that looked something like this, you know. Let me zoom out. 150 pip target, okay, targeting the daily 20 EMA, and a 55 pip stop loss, and that gave me a risk reward of 2.73%. Pretty good, you know. So 1% risk was the 55 pips, that's the 1% risk, and it moved 150 pips, so I made 2.7.3%. So if my 1-to-1 risk was, you know, $500, so in this case, if my 1-to-1 risk was $500, let's say if I had a $50,000 trading account, you know, just to get this example in there again, if I had a $50,000 trading account, right, my 1% risk would have been $500, you know, so 55 pips here would be worth $500. So let's even get our pip value. So $500 divided by 55 pips is $9 per pip. So the target was 150 pips times $9. So would have made 1,350 if my account size was 50 grand, you know? So a pretty good chunk. So that's the beauty of this kind of stuff, you know? So I hope that makes sense. Again, and this one's pretty straightforward. The strategy is there, the strategy fits, you know, it's the break and retest of the 1 hour 50 EMA, that's the strategy after a higher time frame rejection. Because I like this setup, I ended up placing an entry order, okay? But if you want to be more conservative, take the live entry instead, take the 5-minute break, which was present here, you know, and I showed you that already, but let me show you again, you know, the 5-minute break happened right there. Okay, so that's where the live entry would have been. Because of that, your stop loss would have been a little bit larger and you wouldn't have the same reward risk ratio. That's the negative with 5-minute breaks, okay, is that your reward risk ratio will not be as good as with entry orders, okay, because with entry orders, you're getting in at a better price and therefore your stop losses, your position sizing is a little bit smaller and therefore you make more money, okay, because if I entered right here, right away, you would have noticed that my stop loss would have to be 70 pips instead of 55 pips, okay, 70 pips. And if I targeted, I believe it was 15.95, which was the 20 EMA. Now I'm only getting 1.9% instead of there it is, same position size, you know, same stop loss, same target, but different entry, and right away, totally different result. Instead of 2.7%, I'm getting 1.9, you know, so almost a 1% less. So that's the benefit again of pivot orders or entry orders. But the negative is that it could just continue going up and close you out. You know, so I personally only do entry orders when I feel very confident in the setup and I like what I'm seeing. If I need to wait for more confirmation, then I will wait for the rejection and take the live entry instead, the live 5-minute break. But that is it. This explains everything you need to know for this specific example, you know, and let's have a look at the next one. All right, guys, so let's have a look at the next example here. And what we are looking at is the pound dollar short position from April 2018 that we looked at in the previous lesson. Okay, so I mentioned this was one of my favorite trades from 2018. It's one of the biggest trades I have ever taken. It's one of the biggest trades from 2018 as well. So it's also a trade that I missed out a lot of profit on, but I made a lot of profit on it as well. You know, so I wanted to spend a little bit more time on this setup because there's a lot of learning lessons within this setup itself, and I have many examples like this as well that we're also going to dig into in the other strategy lessons and in the other management lessons specifically coming up. But I want to spend extra time on this one as well. So we know this analysis, but let's review it quickly. This is a trade that's based on multi-time frame analysis all the way from the monthly chart down, not just from the daily like we've seen the previous setups. The previous setups were mainly daily setups, quick pullbacks, okay? And they are totally different management. So on those quick pullbacks, the best management is the 4-hour 50 EMA, like I mentioned. You know, so if it's a quick pullback play, best management is the 4-hour 50 EMA. Take your profit and move on if it's a pullback play. If it's a pullback play, but it's backed by maybe a little bit of confluence on the weekly time frame, you know, then you might want to push it a little bit further, such as to the 20 EMA as an example. And that was the second example that we have seen. Right, I pushed it down to the 20 EMA because I had a little bit more confluence, okay? Well, this one has full confirmation, full confluence. Its confluence comes all the way from the monthly time frame, so it's a massive setup, okay? So monthly was sitting at this resistance that we already know of. We saw this multiple times, so major resistance, and the monthly chart was rejecting the monthly 50 EMA and 0.3 to Fibonacci retracement. The weekly chart was giving us a double top at that level. And the daily time frame was also decelerating and rejecting this general area. It's this general region. And I mentioned how it was a false breakout in the previous lesson. So a false breakout is something that you have a major level, it just breaks it, and then right away it gives you a reversal candlestick. It means that there is a false breakout. Chances are the bulls just kind of pushed it up a little bit, and then right away the bears got control. Okay. So then I took the trade short. So the criteria met. I believe that a new run is beginning based on the analysis, based on the rejection, and I ended up taking the trade short on this breakdown, okay? So as I mentioned in the first lesson in the previous lesson when we were breaking down this opportunity here, I mentioned that the entry wasn't perfect on the lower time frames, okay? So because the entry wasn't perfect, it didn't give us like the full breakdown that I would want to see and the proper retest, okay? But it did still break the 1-hour 50. It still did break this ascending trend line on the 1-hour chart that price action has been holding. And because that level was broken, both of those levels were broken, it still fit the criteria of an IBO, of the initial breakout, of the break and retest of the 50 EMA, right? So that criteria still fits. And because it fits, then the trade works. The setup still works, okay? But because it's not perfect, I did not place an order, okay? So in the previous example, you saw how I placed an entry order, okay? But I also mentioned that when I'm placing an entry order, I want things to be perfect, okay? I want zero doubt when it comes to the setup. Well, here I had a little bit of doubt. I knew the potential that this setup has, but I still had a little bit of doubt. So I wanted to wait for live entry instead. Okay, that's an important lesson. When in doubt, wait for more confirmation, period. Okay, when you have no doubt, feel free to place an order. That's what I do, at least. You know, when I have zero doubt, maybe just a little bit of doubt, but everything looks beautiful, I'll place that order and move on with my life, you know. But if I have some doubt, I will wait for more confirmation. I will wait for that live entry instead. So that's exactly what I did here. So let's have a look at that entry, okay? So when we zoom in, on this 5-minute time frame, because that's where the entry happened. So we see here that the 1 hour chart broke down and then started holding that 1 hour 50 EMA, right? And then all of a sudden, volume came in. So you see here, volume started to spike at the beginning of the London session. That's a 6 a.m. GMT, so it's the beginning of the London session. And this is a British pair, so that's when the volume started to spike, and boom, we had that 5-minute break at the beginning of the session. I wasn't considering the earlier breaks because, again, I wanted some clarity. I wanted for volume to pick up a little bit. And then volume picked up, London session started, momentum started to come in, and boom, I took the trade short on that live 5-minute break of that 5-minute 50 EMA, okay? Stop loss. Stop loss placement is simple. So you guys already know my preferred stop loss placement when it comes to the IBO, and that's 0.75 fib. 0.618 minimum, okay, so the minimum stop loss for an IBO day trading wise is 0.618 Fibonacci, okay? But I prefer 0.75, so I try to do 0.75 as much as possible. So that's exactly what I ended up doing here. My stop loss was placed exactly at 0.75 Fibonacci, okay, for extra protection. And then I took the trade short, just like that. Now, target. Well, the target is tricky because when it comes to the target placement, I had no target placed, okay? Why? Let's have a look at the daily chart, okay? And then I'll show you exactly what I meant when it comes to the management, okay? So let's have a look at the daily chart. Why didn't I have a target placed, okay? Simply because of the higher time frames. I was gonna keep an eye out around the weekly 20 EMA, which is also the previous daily lows, so I was gonna keep an eye out around that area. But you can see here that is just the beginning of that monthly run. Okay, so I wanted to push it kind of as far as possible until my management strategy tells me to exit. Okay, period. Until my preferred management strategy tells me to exit. So I'll touch a little bit on that management strategy right now, but we're gonna touch more on it in the next management lessons, which will be coming up after the strategies, okay? Because there's many different ways that you can manage a position. I have pretty much 3 or so different ways that one can manage a position. It goes from aggressive management to very conservative management to kind of in between, okay? And we'll explain them all. I'm kind of in between with more of an aggressive twist, okay? Because I like to take my profit rather than hold and hold and hold and hold and hold. I like to take my profit and move on with my life, like I like to say. So with that said, as you see here, at the previous daily lows and the weekly 20 EMA, it was still at the beginning of the monthly run. Okay, so I wanted to just simply let it ride as far as possible. So the weekly 20 was kind of like the first initial area where I was going to keep an eye out on. You want to know where your levels are, where your support and resistance levels are, so that if price starts rejecting that level, you can act, you can react, you can exit if you have to. So you still want to know where your potential targets are. My first potential target was kind of the weekly 20 and the previous lows on a daily, right? Well, the next target after that would have been the weekly 50 EMA, obviously. Simple, right? The next target is the weekly 50. But as you see, it's still the beginning of the monthly run. The monthly chart barely is going to move when the weekly chart hits the weekly 50. But that's the next level I'm going to kind of keep an eye out on, just in case I would have to exit, okay? But that is why, again, I didn't place an actual target in this setup, because of the higher time frame potential that I had. I just literally wanted to let it run as far as possible, but I still ended up taking profit early because my management strategy, my preferred management strategy, told me to exit, okay? So let's have a look at that. So you guys know my entry. My preferred entry in this case was a live entry because it wasn't a perfect setup, okay? So I didn't want to place an entry order. Stop loss, simple. 0.75 Fibonacci. I do that pretty much 95% of the time when it comes to the IBO, okay? Now target, I was just gonna let it ride, okay, for as far as possible until my management strategy tells me to exit. And my management strategy told me to exit a few weeks later, to be exact, right here, okay? This is where my management strategy told me to exit. And it was right here when price action started to break out above. You can see that we started to develop MACD divergence on this 1 hour time frame, okay? You can see that the 1 hour chart started to bottom out, and you can see that the 1 hour chart broke back above the 1 hour 50, which it has been holding this entire time. One rejection of the 1 hour 50, another rejection of the 1 hour 50, another one, another one, another one, So the 1 hour 50 is a great dynamic support and resistance level. So when price action broke it to the upside, I'm like, okay, time for me to move on, take my profit and move on. And that's what I did. At the same time, you can see that the weekly chart, the 4 hour time frame in this case, also gave me a double bottom with deceleration and a bullish reversal candlestick formation, which was this massive lotus reversal, and it started to accelerate to the upside. Okay, so because of that, my management strategy, my preferred management strategy, told me to exit because of this breakout to the upside. If it didn't break out, I would still be in this position. I would have let it ride. And there's other management strategies that will also teach you that are meant to catch those big opportunities. It's just personally, I like to take my profit and move on with my life, okay? But there's other ways to manage it, like trailing the 4 hour 50 EMA, okay? And I'll talk about those concepts. You could have just been trailing that 4 hour 50, trailing that 4 hour 50 until it broke the 4 hour 50. That's another way to manage a position, right? Rather than manage it on this 1 hour 50 breakout, you can manage it on a 4 hour 50 breakout. And obviously, if it breaks out to the upside, you're gonna catch much less profit, than if it breaks on the 1 hour time frame and you exit there, So there's benefits to every single management strategy, and I will talk about that in the management lessons. But I exited exactly right here, right there. Okay, when the 1 hour time frame broke out to the upside, and I took 6% on this setup. Okay, and that's all in regards to following my rules. I follow my rules, and am I happy with 6%? Damn right. I am happy with 6%. That's a massive move. It was a great opportunity. But how much more could I have made with a different management strategy? Let me show you real quick. We'll come back to this one and we'll go over. When we talk about management strategies, I'm going to show you I'll show you mainly 3 management strategies, but I'll show you many examples of when one strategy might be better than the other, But at the end of the day, it's all about consistency. You want to be consistent with your trading style. You don't want to be all over the place, So if you're a conservative trader, you want to be consistently conservative, okay? If you are an aggressive trader, you want to be consistently aggressive. If you're somewhere in the middle, you want to be consistently being in the middle, and I'm in the middle. So I'm not super short term, I'm not super long term, I'm kind of in the middle myself, But I'll give you options for long term management. I'll give you options for super short term management as well, just so you have that option, because every trader is a different trader. Every trader has different emotions, and every trader might want to approach the market a little bit differently. The strategies are the same. Strategy is a strategy. It's a way to enter. Management, people might be different. Some people might be long-term, some people might be short-term. It's good to know that, right? So what happened? Well, check this out. I took profit right there. But when I fast forward, you're gonna see exactly what I have missed. And right away, boom, price action started to fall farther. And farther. And farther. And it continues to go. Let me make this bigger. And it continues even farther. So you can already see how much profit I missed. I took profit for 6% right there, okay? Little pullback, just to the 20 EMA, and then another small pullback. And it's still going, it's not breaking that 20 EMA. And boom, oh my goodness. And here we are right now as of the time of filming, okay? So I took profit right here, okay? And if I pushed it all the way, well, it still has room to go, because let's fast forward in this monthly time frame to current time. We're right here, so we still have room down to the lows, okay? Weekly chart, we're smashed right through that weekly 50 EMA, right? And we're still accelerating. Right now, we're approaching a pretty decent support level as well, right? Previous lows, previous highs, so it's at a pretty decent support level, But if I ended up managing it based on the higher time frames, which one can, and I will show you a way to do it, managing based on a higher time frame. It's easy, it's not too complicated, it just has to be part of your style, and it's not part of my style. I like to take my profit and move on, And that's the thing, I'm happy with 6%. I don't have fear of missing out, so I don't care that I missed out on so much, because I don't have that fear. I know the opportunities are always there, and that's a very important lesson that everybody needs to learn at some point. You will have to learn at some point in your career, trading career as well. you know, because at the beginning you probably will have FOMO, or fear of missing out, okay? But let's just say, you know, because to be honest, I haven't checked this myself. I didn't check how much I truly missed out in this setup. So let's see, 1.273, that's where price action is sitting at right now. 1.273, 1.273, enter, 28%. 28% move. You know, and that's the beauty of these strategies, and that's the beauty of higher time frame, multi-time frame analysis, you know, multi-time frame analysis and utilizing the higher time frames. That's the beauty of it, because when these kind of opportunities happen, there's a massive opportunity, okay? And the higher time frames, it takes a while for the higher time frames to develop, you know, specifically in the monthly time frame, it takes a while for the monthly chart to develop, you know? So it's all about patience and being ready for those setups when they happen. And when they happen, you gotta execute. Like in this case, you know, I wasn't afraid to take something that is a little bit more discretionary because I know of how much potential this setup has. And I missed out on, I took 6% and I missed out on, you know, over 20% that I still could have grabbed based on my initial call, you know, down to the monthly lows. And it's still probably gonna hit those monthly lows eventually. At some point, there's probably gonna be a weekly pullback, you know, because it has to. But at some point, it probably will hit those monthly lows, you know. And if I was holding, yeah, I would have been much higher this year than where I am right now, simply because of this one trade. But to me, it's not about one trade. It's about consistently making profit over and over and over and over again. That's how I like to approach the market, you know. But again, there'll be different management styles, and you can choose based on the trader that you are, whether it be short-term or long-term or somewhere in between, okay? So that is it for this example. I'm gonna show you another example, which is gonna be a swing play. It's very similar, but it's gonna be a swing opportunity. I ended up taking a day trade on it, which I will cover it in another lesson, but we're gonna cover the swing trade right now. So let's have a look at the next example. All right, guys, so let's wrap up this strategy lesson on management and execution and stop loss and target for the initial breakout strategy. And let's finish off with this swing trade that we had a look at in the previous lesson, okay? So this is swing example of how to execute the initial breakout as a swing trade, you know. So let's quickly recap. And you're mainly focusing on the higher time frames when it comes to swing trading, the monthly, the weekly, the daily, to be exact. That's what you're focusing on, okay? Now you can choose to execute this as a day trade as well if you're a day trader, and I did, and I made significantly more money, more than 3 times as much than a swing trader would by day trading this setup, okay? Simply because of a different entry, different stop loss and such. But it takes more effort, it takes more time to day trade as well. So obviously there's a benefit to swing trading, you know, less time and more time for yourself to work on your dreams or anything else that you like working on, you know? So it's important to know how to execute on a swing trade with these strategies, and it's the same thing. It's literally the exact same thing as you guys saw. You know, focus on a rejection, like we have here on a monthly time frame. We have this rejection of support, this bullish engulfing, and we believe that a new run is happening to the upside, right? Period. Then look for confirmation. So the weekly chart in this case is giving us a triple bottom, starting to confirm the setup. And then the strategy plays out on the daily chart in this case, which is the break and retest of the 50 EMA after that good daily rejection with a little bit of weekly confluence in our favor, okay? So to make sure that we're not getting ourselves into a trap. So every single time frame here has a bullish bias, which is perfect. And then the daily chart broke out, came back for a retest of the daily 50 EMA, and then we took the trade long. Okay, so I briefly mentioned in the previous lesson when I covered the setup that when it comes to swing trading, it is not necessarily necessary to have your stop loss at 0.618 fib or at 0.75 fib. You can, you know, you still make decent profit, you know, and there'll be much bigger opportunities that you can execute as well than this. But it is not necessary because you can utilize an extra step, okay, to tighten up your stop loss. So because as a day trade, it is a must, at least for me, it's a must to have my stop loss at least below 0.618 Fibonacci for the initial breakout strategy. That is a must for myself, okay? And that's how I'm teaching you guys that it's a must as well, okay? But for swing trading, it can be a little bit different because for swing trading, guess what? you can jump on a lower time frame, and this is something I already told you, but it's important. When you have this rejection, so the entry here happened, I personally wouldn't recommend placing entry orders when it comes to swing trading, because you can just place an alert. When that alert triggers, wait for the reversal, and then at the end of the day, take the trade. So in this case, you will place an alert on 0.382 Fibonacci, the daily 50 EMA. That alert would have been triggered right here on the 5th, okay, or the 10th. Then the setup would have happened at the end of the 9th. So on the 9th, the strategy would have been triggered on the 5th. The alert would have been triggered on the 5th, and then the setup would have happened on the 10th, so the following week, once this bullish engulfing closed on the 9th. So when the bullish engulfing closed on the 9th, right away, pretty much you would have taken the trade long at exactly that point, as that bullish engulfing closed. So you don't have to place entry orders or anything like that. Just place an alert and wait for the setup to happen. More safer that way, and then stop loss. Well, stop loss, like I said, you can be safe and put it at 0.75 fib. You can be safe and put it at 0.618 fib, and you can definitely do that. And you can still make 3%. But if you want to have a tighter stop loss, you could have a stop loss that is below 0.5 or just below the previous lows, the overall lows. So I would just say 0.5 out of, at like equal numbers, so 200 pips or so. But you have to have further confirmation. So I would highly recommend, if you're considering taking a swing trade like this, quickly jump on a lower time frame. Just have a look at the 1 hour chart and see if you have bullish price action. See if you have a trend change, because this will give you a higher high on a 1 hour time frame. So right away you would see, yep, got a breakout, we have a higher high, and I'm ready to take this trade, with a tighter stop loss. Because guess what? If the intraday time frame, such as the 1 hour chart, has already broken out, started a bullish trend, then you believe that right away the lower time frames are already in a bullish trend, and therefore the daily run has begun. And if the daily run has begun, then this is a fully confirmed rejection. If you have an intraday trend change, then this is a fully confirmed rejection. And if this is a fully confirmed rejection, then you can tighten up your stop loss, put it below 0.5 fib. Okay, so that's the only difference between swing trading and day trading when it comes to this strategy. The only difference. Everything else stays the same, except that swing trading is obviously you're holding for much longer. But that's it. So you can tighten up your stop loss if you have that intraday trend change, and then you can maximize on your returns a little bit. And then target placement. Well, like I said, the 50 EMA is the target placement in this case. And if it comes a little bit short, then obviously you can exit for a little bit less if it starts accelerating to the downside, or you can just let the strategy play out until it hits your desired target, because when it just missed it right here, there was still confluence for bullish side, like we still came back to reject this weekly 50 EMA, so we broke out and we missed the target, came back to reject the weekly 50, and then eventually hit the target, so you can still hold. But that is kind of how this position would have been managed. So that's it, very straightforward. And I think by this time you guys already know how to execute this strategy, where to place the most ideal stop loss, where to place the most ideal target and stuff like that. So because this has higher time frame confluence, we have the double bottom on the monthly chart. Therefore, I was willing to push it up to the monthly 50 EMA because of the double bottom and the great overall multi-time frame analysis, So all of that is the same. So I gave you guys quite a few examples. I spent, I think 2 hours or so already talking about this strategy, maybe a little bit less than 2 hours, but somewhere around there. So you guys have already a lot of knowledge, and we'll continue this into the other strategies. And the other strategies are similar, specifically the next one, very similar, a little bit different, but it has a very similar approach, similar stop loss, similar entries, similar targets and such. So we're gonna have much more exposure to this. And after the strategy lessons, we're gonna be digging into multi-time frame analysis, where we'll again be looking at more trades, more analysis, more management and stuff like that. Sorry, we're not multi-time from analysis, we'll be looking at management, in the next coming up lessons. So when we look at management, we'll have much more exposure to this. So with that said, that is it. Let's wrap up this strategy. And in the next lesson, I'll be showing you guys the 3 different variations to the initial breakout. Initial breakout A, initial breakout B, and initial breakout C. They slightly differ, okay? And I'll show you exactly how they differ. It's gonna be a short lesson, nothing too crazy. And I'll explain why I categorize them into 3s, the significance of that, and how you can properly execute the strategies based on those 3 different categories. So I'll see you guys in the next lesson.